Hey guys, Christos here, and in today's video I'm going to be talking all about Corsair Stock. Now, I don't know about you, but I personally think that this company right here is set for some massive gains in the near future, and today I want to share with you 3 key factors that could be catalysts to this stock doubling within the next 12 months. Now, I really think that you might be quite shocked at how cheap this company really is right now, considering the position it's in. So I'm not going to waste any more time. All I ask from you guys is to hit that like button down below, and yeah, let's jump straight into it. All right then, so let's kick things off with the biggest point that I want to make today actually, and that is I think that this stock has been ridiculously oversold over the past couple of months, which has then in return made this company completely undervalued. Now, of course, when anyone talks about value of a company when not using numerical backing, this is always going to be just a simple case of a personal opinion, but I do have some really interesting things that I want to share with you guys today that I think may back some of these claims up ever so slightly. The first thing I want to talk about is the amazingly low price to earnings ratio that this stock currently has right now. And if we take a look at the stats before market open today, this stock is actually sitting at a price of $26.41, giving it a PE ratio of 16.1. Now, that sounds very good, right? And it sounds even better when you compare it to the market average PE ratio of 17.7. Now, what does this tell us? Well, what normally happens is if we have a stock where its PE ratio is trading lower than the market average, this normally tells us that this stock is going to be providing us with quite a value play. Now, these are normally considered as value stocks, right? However, this is where things get really interesting, because whilst it may look like a value play just from looking at a few of the basic numbers, in my opinion, Corsair is pretty much the opposite, and I actually consider this company to be completely high growth. Just taking a look at this chart right here, as you can see, the company has seen their annual revenue grow by double in the past year alone, whilst, yeah, I know a lot of tech companies have seen the same growth, but to have your revenue double in just 1 year is shouting out growth stock all day to an investor like me. So basically what I'm saying is that what we have right here is what I consider to be a growth stock that is actually priced so low is actually considered as a value play. Now, one thing that I am going to say, I know I haven't been in the stock market for decades like some may have, but this is the first ever company that I have come across where I have seen anything like this in terms of a comparison that is so different. I actually have some even more crazier findings in terms of the financials that I'm going to be bringing up later on in this video. But first, let's stick with this one and actually try to work out how the price has actually gotten so low and undervalued in the first place. Because of course, the stock didn't magically go from being $40 at the end of June to roughly $26 on the day of recording this video. Something must have had to have happened to have caused this oversell in the stock. And I personally think there are a couple of things. Now, the first thing that I want to talk about is that just generally over the past couple of months, the market in general has been performing very much sideways. And if anything, it's been trending downwards, which is of course going to affect all stocks, right? If we just take a look at this chart of the S&P 500, as you can see very much from the end of June, maybe July time, it has been very much trending sideways, and it has actually ended up lower now than what it was at the end of July. So when it comes to kind of proving my point in that terms, I think that this chart very much does that justice. But personally, I think that the main thing that has caused an oversell of Corsair stock was actually from the start of this year. Now, what has basically happened is that Andrew Paul, who is the CEO of the company, by the way, has sold almost $9 million worth of their shares, or his shares, let me just say, in the company, and hasn't actually bought anything since. And I guess the general consensus is, right, if the owner is dumping the stock and not buying any more stock, it normally sparks concerns about their confidence in the company going forward, right? I mean, let's say that I owned my own company and I had absolutely no doubts about the company's growth going forward. I'm a smart businessman, I'm a smart CEO. The last thing that I'm going to be doing is selling my shares in the company, right? However, if I thought that my company might not have been performing very well, I may not have a future in the company, then maybe I think, why not sell the shares now whilst they're high, and actually take some profits out of the company? One thing I guess we'll probably never work out is his actual reason behind the sell of those shares back in January. Maybe he just wanted to go and buy himself a nice brand new mansion in Hamptons or something like that. I don't know where he actually lives. But one thing we'll never know is why the CEO has actually sold those shares at that point and why he hasn't bought any more since then, I guess. But one thing that I have to say is that when a CEO sells a stock, that generally sparks concerns in terms of the confidence of the company going forward. Another thing that you can actually see on this chart, this is a chart of all the different insider trades that has gone on, is that Eagle Tree Capital has actually sold a larger amount. But what this is a private equity firm, and this is very much a normal thing for them to do. As you can see, they sold it at around $39, which was close to its highest point. So obviously they have customers that they want to make money, so they're going to sell the shares when they're high and then buy them again when they're lower. So I think that one's a different story, but obviously when it's the owner, it may cause some concerns for investors and institutions about this company and its stock price going forward. So that is basically what I think has caused the oversell of this stock. But one thing that I am going to say is that I personally don't think that all of this is much of a concern for this company going forward, because at the end of the day, Andrew Paul, the CEO, still actually owns around $70 million worth of shares in this company. So it's not like he's gone out there and said, oh, I'm going to go and dump my entire stake because I don't believe in this company anymore. I'm going to go and start up a new company. He's still actually the third largest holder in this company. So it's not like he's kind of just sold out of all of his position or anything like that. In fact, the position that he actually sold out of in January was only a small amount of the amount that he actually still owns. So in my own personal opinion, I don't think it's too much of a concern in terms of this company going forward, but I do think it has potentially caused others to sell out of their positions, leaving this company, in my opinion, completely oversold and completely undervalued. All right, the next thing I want to talk about that I think could be a key catalyst in terms of this stock going forward, and that is some news that has actually recently come out, and that is Corsair has recently announced that it's releasing its first ever gaming monitor. Now, why is this important? Well, at the start of my journey investing into Corsair, one of the very few concerns that I actually had about the stock was how are they going to get out of the gaming niche if the gaming niche suddenly dies off? Now, one thing I'm going to say now is, yes, I know online gaming is very much thriving right now and will likely continue to do so over the next coming years. But as always, I like a company that has different areas of products that they can make money from. So if one side of their business changes for some reason or another, then it has an easy pivot. And I feel like Corsair could now be doing this with the monitor side of their business. Yes, as we can see, taking a look at the monitor right here, it is being advertised as a gaming monitor. And yes, it is a very expensive price. But let me tell you something right now. Number one, people who are serious about gaming or streaming maybe will pay that price. And number two, this is just the entry point. If this goes really well, and I can fully see this going really well, then I can definitely see Corsair breaking into the monitor game, offering maybe multiple variations of monitors for gamers, maybe a cheaper one, maybe one that hasn't got as good kind of graphics or processing speeds or anything like that. And I think that they could potentially break into the whole monitor sector, which is of course going to generate a brand new revenue stream for them. One thing that would be really good for Corsair, and one thing that I would consider as the holy grail and something that would really get me excited, even more than what I am right now about the stock, is if they started offering monitors not just for gamers but for just everyday PC users, because what you're then doing is broadening your market to pretty much the world, let's say, because everyone is using monitors and things like that, and obviously that then stops them from being pigeonholed into the gaming sector. Now, whether they're going to do that in the near future or not, I'm not too sure, but one thing that I can definitely tell you is that the fact that they're making monitors actually allows them to be able to pivot into this if things started going south in terms of online gaming. But like I said, I don't think online gaming is going away anytime soon. It's only going to be growing over the next 10-15 years. Oh, and by the way, if you didn't already know, I've actually recently just launched a brand new free investing Discord group that anyone can join, by the way, so make sure you check that out after the video is finished. The link is going to be in my description down below. One thing I have to actually say as well is that we actually have a dedicated Corsair Stock channel, so the more people that we get in that's interested in this company, the more insights and activity we'll see in that group too. So yeah, make sure you go and check that out. All right, so let's move on to the third point, and this one is absolutely massive in my opinion. And to be able to show this, I have to revisit the financials of this company. And this time, we're not just going to be talking about their revenue growth, but now how much money in terms of margin they are actually going to be making. And I think that this point right here could actually be a key point to actually make larger investors and institutions actually wake up to this company over the next year. So, as we already know, revenue from the company from 2020 to 2021 just about doubled in that 1 year period. However, if we take a look at this chart right here, which actually shows their profit margin, it hasn't just doubled in the past year, it is 5 times the previous year's margin. What you can see here is that the company saw a growth of over 380% in 1 year. And when you compare this to the tech sector as a whole, whilst the tech sector is doing very well, I must say, in terms of an average growth year on year, Corsair just blows that average number out of the water. So once again, going back to the valuation of this business, the one thing that we need to remember is that this stock is currently trading at a PE ratio of around 16 while still putting out numbers like this. Now, one thing that I did want to touch on is the debt the company currently has, as some may say this could be potentially what is holding the company down slightly. As you can see here, the debt to equity ratio we currently have sits at around 51%, which is generally considered quite high. But one thing you can notice is that their debt has actually dropped from close to 500 million to 270 million in the past year, which is of course a big improvement, right? Now, I know for this valuation, 270 million is still quite high in terms of a debt figure, but I think it's going to be really interesting to see at the next earnings call, which is going to be around November the 9th, I believe, if this reduction in debt actually continues to happen, which I personally think is going to happen. So we'll stay tuned in for that. But nonetheless, I think from a financials point of view, Corsair Stock is looking really, really solid right now. And I just think if it continues to post good results, good financials, and of course the innovation in this company continues, I can really see this stock taking off over the next 12 months. Why it's trading at a PE ratio it's currently trading at right now, I don't know, but one thing that I have to say is that this is all just my own opinion. I am no qualified advisor or anything like that, so whatever you do, whatever you take from this video, make sure you always do your own research. But one more thing that I wanted to say as well on this, if you did want to hear some other opinions like mine, or maybe some opposite opinions, because we have both sides of the coin in our Discord group, then make sure you go and join that as well. The link is going to be in the description down below. Other than that, I hope you enjoyed this video, and yeah, I'll catch you on the next one. Take care.